Welcome back to Road to Fire. We're a family of three documenting our journey to fire, financial independence, retire early. Let's chat about our first duplex house hack. I'll share our overall strategy and provide all our real numbers like always, so please hang with me. Just to be 100% clear, we close on the 27th, so we do not technically own the house yet. I mean, it's possible that the sale could fall through, but I'm feeling really confident. All three, yes, three of our home inspections went well, so we are in the home stretch. Trying to contain my excitement is very hard, but I'm happy for this new transition. Okay, so what is house hacking? House hacking is a strategy that involves renting out portions of your primary residence to generate income that is usually used to offset the cost of your mortgage. Key phrase, offset the cost of your mortgage. I learned about house hacking while listening to the Bigger Pockets podcast, and I knew we had to get into this. The main purpose of house hacking is to free up cash for you. It took us 2 years to go from ideation to completion, a lot longer than I thought. There are several different ways or different types to house hack, but these are the top four that we looked at. First, there is the classic or traditional multifamily home option, which gives you the ability to own a home without all of the costs associated with it. There is also hosting or renting part of all your home through companies such as Airbnb and HomeAway. We've never dabbled in this before, but might in the future. Then there is renting a room in your house, as in having a short term or long term roommate. This probably wouldn't have worked for a pair of introverts like my husband and I, plus we have a kid, so we really enjoy our privacy. And in my area, renting your garage has become very big overall, as space is very limited and parking is so expensive here. Plus, our winters can be very long and brutal. I'm sure there are many other ways to house hack, but these are the most common ones that we looked at. We chose multifamily as it fits our current way of living and our lifestyle perfectly, and we've never needed a lot of space, so quote unquote sharing our house was never an issue. Okay, let's get into our projected numbers. These are the current closing cost information I got from my loan officer, but might change as we are still in negotiations with the seller. I don't expect much changes unless the appraisal comes in upside down, but you never really know. So here are the specs of the duplex. The image on the right is basically a true depiction of what our house looked like, but I share all our real footage on my IG page, so follow me there if you're really interested. The asking price was about $399,900, which was way over our budget. In fact, we personally wanted to stay below $350,000, but I'll explain what happened in a second. The multi-unit is an up and down, although we preferred a side by side. Those were much harder to find, and we lost out on a few of those while we were looking for a home. The benefits of a side by side is that it has separate utilities, plus it feels more like a townhouse than a duplex. Overall total square footage is about $1,800 for the top unit, which is the unit that we'll be staying in, and that has four bedrooms and two baths, and it's across two levels. We don't need all the space, but we're not complaining. The house was a triplex and was converted into a duplex, so the top unit actually has two levels. And the second unit that is occupied is about 860 square footage, and it's a two bedroom, one bath. For context, we live in the Midwest and the house was built in 1910. I know this sounds very old to many, but I actually prefer historical homes versus new builds. So this is the duplex specs to provide clarity. Never thought we would be buying a home like this, but here we are. Okay, let's get into the duplex financials to understand our expected cash flow. So the asking price was nearly $400,000, but we were able to get it down to $350,000. We did not want to go over this number, and the seller had the property in the market for about 70 days, which was very long for this time period. We did have to offer above other offers that were currently in the house, so it was not an easy negotiation. Sidebar. Right now, there is a supply and demand issue with the housing market inflating housing prices in our area. And with the record low rates, the competition is really steep. We saw nearly 20 homes and was outbid on a few of the other houses that we want. So overall, it's a really weird time to buy a home. Okay, so the loan amount is $343,661, and that includes a 3.5% down payment plus the FHA MIP for a 30-year fixed loan. So why did we choose an FHA loan when we can obviously put down more if we needed for a conventional loan? Simply because with a conventional loan, you would need to put down 15% for a duplex, and I really was not willing to have that much cash locked up in a mortgage, especially with the rate we got. We currently got our interest rate about 2.25%, so I really thought our money could work harder for us in another place outside of our mortgage. So here's our mortgage payment breakdown. Our principal and interest will be about $1,313. Home insurance with Progressive is about $150, but we're expected to have this decrease about $25 once we install a security system. Mortgage insurance with this fix will be about $239 every month because we only put down 3.5% and we have an FHA loan. Property taxes would be about $395 each month, which is expected to decrease as there are tax assessments on our current county bill. This is also high for the state that we live in, but we're in a really great location, which is really good because I want my son to be in a great school system. So our overall mortgage payment will be $2,097. Not going to lie, I was a bit freaked out by this number as our current rent is only $1,800. But our expected rental income from day one will be about $1,215, and that includes snow and lawn care. I do feel that the rent is a little bit low for the location, but I'm not complaining. So our monthly payment after renter income will be about $882, and that would decrease about $60 after the tax assessments and the discount we get from Progressive is solved. So how much we'll be saving? We'll be saving about $918 against our current $1,800 rent. So I am really stoked about having an additional $918 come back into our pockets. Now I know there are additional fees associated with owning a home, and I'll do a complete rundown once we have full data from at least 1 or 2 months living in the place. But let me enjoy this moment for a second. But if we rented out our unit today, as it was listed for about $1,700 a month, we would get about $2,915 in total rental income, and it will cash flow about $850 a month, which is not bad. It's kind of amazing, honestly. So why did we choose a duplex versus other ways to house hack? Number one is simple, cash flow. We free up over $900 a month just by doing this duplex house hack. Imagine getting an additional $900 in your paycheck each month. Think of the things that you can do to advance your financial journey. Number two, it's consistent. As long as we have a lease locked in, we can expect the rent to come in the first of every month. Our current tenant is locked in through July, so we know for sure at least through the summer of next year we'll have this income coming in. And the last part is leverage. We now have an asset that we can potentially leverage to further build wealth. Now, real estate isn't a major part of our strategy to fire, but it does give us options. We are now able to free up more cash with house hacking that now allows us to invest more. All additional money will be sent to our savings and investments. We are excited to start creating more aggressive goals for 2021. So if you've been following me through my journey, then you're really familiar with this view. Our fire number is just shy of $2.5 million, but the key call is how much we have invested in real estate versus stocks. The $300,000 represented in real estate is owner equity, not asset value, but it only represents 12% of our total plan. Our main focus will always be stock investments, which is about 80% of our planned future net worth. For us, real estate is a great means to increase cash value and cash flow, but to grow our net worth, we have everything heavily weighted on stocks. It comes down to perceived value versus actual value for us. So here's our projected passive income trend. If we end up closing on the home in the next 2 weeks, we will have increased our passive income by over 15x. If you can't tell, I am so excited. I'm starting to make future trend graphs of what it'll look like for November, December, and January, and as we start building our 2021 goals. Keep sending us good vibes as we really hope to close on this deal. So much is changing with this purchase. I know the saying is the first $100,000 saved is the hardest, but I swear the first house hack feels much harder. I can't wait to fast forward to a few months from now and we are just cruising in our new place. Now, if you made it this far, thank you so much for watching. But don't forget to comment and subscribe below. Until next time.